Hey everyone, this is Mark from Stocks and Cash. It is Monday, January 29th, 2018, and I'm here with your market update, go over my holdings and some potential setups for tomorrow. So the market had a down day today. We had an inside day bearish candle. Um, Inside day meaning that the top, the high of today's candle and the low of today's candle was all within the high and the low of the previous day's candle. Um, that type of candle can indicate consolidation. Um, it could also indicate the sign of a reversal of a trend. So definitely something to look out here for. We did close at our breakout level that we drew, and we are still a little ways away from our 8 EMA. The 8 EMA is at 282.82, so it's about $4 or so away from where we are. Um, this trend line is in jeopardy of being broken. I wouldn't be surprised if we came down and tested this 8 EMA at least. You can see that MACD is pointing downward. RSI is coming down a bit, and the Stokes are a little flat. And both the RSI and the stochastics, are overbought. They have been overbought. They could definitely use a reset. Um, what concerns me is that the stock futures are very low right now, are down. You can see 0.6%, 0.7%, and 0.9% respectively in the S&P, Nasdaq, and Dow. Now it's only about 11:30 here East Coast time, so there's still another 10 hours or so before the market opens. Anything could happen. We could rebound, um, but this isn't a positive indicator. Um, and it does kind of set up to have a pullback, in the works. It's possible that we could open low and bounce, um, but given that we haven't had a down day, a real pullback, a real down day in quite a while, it does concern me. So there are a few bullish trades that I was looking at, but nothing that I'm eager to get into based on the overall market action. I will show you those setups, assuming that the market does kind of recover and doesn't open too low and kind of carries on or at least moves sideways a little bit. Um, but again, I am a little concerned in the short term that we're going to pull back. My sentiment was bullish on Friday. Um, Nervousness today, especially with those futures. So we'll see what happens. Taking a look at the Qs, kind of a doji candle, which is usually an indecision candle. It's also an inside day candle. And the fact that it's a doji to me has even more significance in that it could be the sign of a reversal or at least a pullback. Um, MACD is starting to roll. It hasn't started to point bearishly yet. Um, Stokes are still overbought and RSI is still overbought. So certainly room for these indicators to reset. Certainly room for the Qs to kind of pull back a bit. Taking a look at my holdings, not the best day. Disney, I'm up 1.42%. Duncan had a very big down day today. I'm not entirely sure why, but that was a bit concerning. Everything else was kind of moderate down. IWM was down, AXP down, DE was down, as was eBay. I did buy Seagate in the morning. That's up slightly 1.5%. So I'm going to monitor these positions very closely. I'd rather take small losses here in the single digits or low teens. I don't want, I don't want to get into, a sell-off and be holding these positions. So certainly going to keep an eye on, these positions and the overall market and how it behaves tomorrow. Now, I don't want to be too hasty and whipsaw. The VIX was actually, which is the kind of the fear indicator, was up today. Um, so when that happens, when the VIX starts rising, you can tend to get whipsawed out of trades. So I don't want to be, oh, it's a down day today, so I'm bearish. Oh, there's an update today, I'm bullish. That's not how I'm trying to approach things. I'm just looking at the indicators and the fact that we're overbought, and that could cause us to roll over. So I will go over these positions and some setups for tomorrow. First, Disney. Down candle today. Nothing, crazy. MACD is trying to turn up, but hasn't as of yet. I'm not expecting too much out of Disney. Again, I'd still like to get to that 113 level and sell off, but it's a small position, so I'll be sticking with it. American Express, again, not much of a candle. Nothing really happened today. The MACD is trying to cross over, although it's pointing down a little bit. But RSI and Stokes are low. So, if the market rallies, I think American Express would rally with it. Taking a look at DE. Quite a down day from where we were on Friday. We came back and tested the 8 EMA, so I'd like to see a bounce, but I'm not too confident we're going to see it. MACD is crossed over bearishly. Both the Stokes and the RSI are pointing downward and looking to reset. So unfortunately, this trend may have tired out. My stop is pretty close to the 8 EMA. I don't want to give it too much more room. I'd rather get out now, have it pull back, and then find another opportunity to get back in. Even if that time to get back in is when we re-break out if we get back to this level at 170.86. Looking at the IWM, it again had a downward candle, bearish candle. MACD is trying to cross over bearishly. Stokes are looking to try to reset, and RSI is pointing downward. Now, you can see historically the MACD on IWM, it crosses, and the stock really isn't doing a whole lot. So, unless we have a really, defined MACD crossover and ride that line, I'm not putting too much stock into the MACD. But I am a bit concerned of a rollover. We did come back and test the 8 EMA. We kind of closed right on it. Again, I have a positive position right now. I have a gain. I don't want to risk too much of it, so I'm going to play more conservative here and get out of these trades, at the first sign of trouble. Taking a look at Dunkin'. Again, there must have been some kind of news. It gapped down pretty low, down here at around $65. Came down and made a low of $64.91, and ultimately closed right around the 8 EMA, so below it. Gaps do like to fill, but given the market, I'm not sure if we will fill that sooner or later. But you can see after that move, MACD is turned down, RSI is down, and stochastics are down. A lot of volume on today's candle. This was not an earnings play. Excuse me. There was some other news in the market that caused this price action. So not too crazy about my position now, given how far it gapped down. So I'll definitely keep an eye on Dunkin' Donuts. eBay kind of had not much of a candle, kind of a shooting star-ish candle like these two that we saw here. eBay could move up higher, but again, if the overall market rolls over, I wouldn't expect eBay to be pushing too much higher. So last position is Seagate, STX. It had a nice day today, actually. Opened kind of low, tested the 8 EMA, and then closed above the high of yesterday's candle. So, and on strong volume. So, just because the market rolls over doesn't mean every single stock is also going to follow it. Some stocks kind of move to the rhythm of their own drum. This one could be one of them. So I'm not going to say that it's going to blast off or anything like that, but it may hold its own given a weak market. So I do like my Seagate trade right now. I have a stop at the low of probably yesterday's candle, or maybe even today's, whichever one is lower. I'll have to take a look, but um, I'll give this trade some room to breathe and see where it goes. Now, taking a look at some other potential options, I'm going to go over the long potential options and then go over a couple of shorts that I liked. So LVS is one, Las Vegas Sands. Had a big update today. Big bullish candle. The thing I don't really care for is that MACD is kind of hyperbolic. It's just straight up. RSI is back to oversold, and the Stokes are kind of oversold. But if you notice, the volume has just been increasing these last few days. It did break out. I think there's opportunity for it to run. If you are going to go against the market, assuming it's a down day, excuse me, I'd be pretty careful and get into a small position. You don't want to get into a huge position and have this trade go against you. But LVS has been relatively strong lately, and if the trade works out, you're risking maybe $1 or so for a $5 return, $5.50 return. So definitely some opportunity there if the trade goes your way. Twitter is a setup. Not something I would get into unless we get a close above 25.63. But I do think if we do get that close, then we could see 27.13 and 29.07. But again, this is obviously acted as resistance. We touched it and closed below it again today. So we really want to see a close above this resistance level before we get into that trade. The gap, GPS, it's looking like it wants to retest its breakout level here of 35.17. It did break out a few days ago, kind of failed, retested the 8 EMA, and now it's trying again. So if we get a close above this breakout level, then it might be good to get into GPS, assuming that it kind of follows its own pattern and doesn't follow the overall market. Looks like we have a small risk here. Put your stop at the low of this candle on 126. That's about a dollar risk for almost $6 in return. So I do like this GPS play if, again, the market kind of cooperates. Couple more here. MGM. Oops. Had a nice big strong candle today. Same situation as some of these other trades. It broke out. So, on your 5-minute rule, if you think that MGM is a good play, you get a close above the high of the first 5-minute candle, you could take the trade and see if it rides up. Not the best risk to reward because MGM kind of trades in a tight range. But you get in at around 38.41, and you could get a $2 gain or so at 40.85. So definitely some opportunity here, but probably not my favorite trade. Tesla, the last potential bullish trade. Now, as I said on my weekend update, this hammer candle can signal a reversal pattern, and in my mind, we had a down day, a hammer, and indication of a trend reversal. That being said, the overall market makes me a little concerned. But again, on the 5-minute candle play, if you get a close above the high of the first 5-minute candle at the open tomorrow, you can get into Tesla long, see if we retest this first target, and then 376.56 is realistic. Now, if the market kind of recovers, I really like this trade. We back tested a little bit. We broke out, back tested, and now we're trying again to go even higher to that second level. So I do think this is a great opportunity. Again, I never said to short Tesla. It was just a word of warning that having this big bearish candle after hitting our first price target was indicative of a pullback. We saw that pullback, and now it looks like we're on our way to continue on upwards. And again, the only thing I would caution, if the market rolls over, Tesla could follow with it potentially. So just keep that in mind if you do decide to go long in Tesla. Couple more stocks here. These two are potential bearish plays if the market opens down and continues on down. So CVX, I apologize for my voice. CVX closed below the 21 exponential moving average. So I drew kind of I guess I'll call it a reverse fib on this leg. I see a resistance level here at the 55 EMA, which is 124.7, and that gives you about a $6 worth of profit if you buy puts. You could put your stop at the high of the 21 EMA, which is 129.22. That gives you about a $1 risk, or you could be a little, put on a little more risk and put your stop at 131.62, which is the high of this candle. When you do that, your risk reward is now 2 to 1. So not quite as good risk to reward if you put your stop all the way here at the high of today's candle. So I would be cautious of where you put your stop. But tomorrow, if we open low, or even if we open up a few cents, and you get a close below the low of the first 5-minute candle, you can use this rule for a bearish trade and see if you could ride down a couple days to the 55 exponential moving average. You can see the Stokes are heading towards oversold territory. It hasn't gotten there yet. RSI has plenty of room to go, and the MACD is pointing bearishly. And we also closed below the low of both the 21 and 8 EMA. So a lot of bearish sentiment that I see on Chevron here. I think it's kind of ripe for a bearish trade. The last potential trade setup I have is Caterpillar. It's had some consecutive black candles here. The only thing I'd be slightly concerned about is that this 38% retracement on the Fibonacci could be acting as resistance potentially, or support rather. But we did close below the low of the 8 EMA and the 21 EMA. So I think there's some potential for Caterpillar to continue lower. Again, I would use the same type of 5-minute rule that I discussed earlier on CVX. And if we do get through this 38% retracement, we could come all the way down to our 100% retracement of 154. So I do think there's some room to run on Caterpillar, especially if the market kind of rolls over. Again, you can see the stochastics are bearish. RSI is pointing downward, and the MACD is bearish as well. So again, Chevron and Caterpillar to me are looking very weak. And I would feel comfortable getting in bearishly, buying some puts, if the 5-minute rule kind of plays out. Lot of well, let's take a look at the pre-market. Yeah, it hasn't really changed too much. It's still down, quite a decent amount. So we'll see what happens at the open tomorrow. I think you just need to be nimble with your trades. Feel comfortable with your trade plan and execute to your plan. If you have any questions or comments, feel free to leave them in the comments section. Thanks for watching and have a great night.